Well, good morning, good afternoon, good evening, wherever you are. Welcome to Breakout Trading Entered, the show where we talk about all things breakout trading and more. And joining us today, of course, is Mr. Breakouts himself, Thomas Nesnedor. Welcome, Thomas.
Thank you very much, Andrew, and welcome everybody. Mr. Breakouts is here, and as you can see, this is quite a premiere for you because a couple of things are different. So first of all, I'm not in my usual setup, and the reason is that I'm on a small holiday in Barcelona. So for the very first time, I'm streaming from a hotel, from outside of home, and with a brand new camera. So I hope everybody can see me well. And second, and I'm going to share with you, I have to tell you guys what is it I'm going to do here in Barcelona, and I think you'll love it. And let me show you. So I have a special shoes like this. And then what I'm going to do here, wait, give me 1 second. I'll just show you. This is a very special invention. You have holes here at the bottom, and you click roller skates there. Yeah. So I'm going to roller skate Barcelona. Tomorrow I'm going to take them out and I'm going to roller skate Barcelona, and that's why I'm here. Yeah. So just to share something from my life with you guys.
Well, that's it's good to hear that you're on a little holiday, because we're all going on a holiday today. We're all heading to the European markets.
Yes.
European holiday.
European holiday, yes.
Yeah, that's great. So we got some hellos in the chat. Hey, Eric, good to see you. Ludwig, welcome. Hey, Mark. Olga, Chris, g'day. Thank you, everyone, for joining us today on our little trip to Europe.
Good to see you again. And actually, I can already see that, some guys are from Europe. I know, I recognize the names. So we do have some European audience here already. Yeah, and we're going to talk about something, quite frankly, Andrew, I have not seen anybody talking about European markets yet, which is quite surprising, right? Like it almost looks like we're on one of the very first on YouTube, if not the first one, at least when it comes to breakout trading and futures markets. I couldn't find anything particularly about European markets.
So we might be the first, which is great. Yes.
We like that.
So this is obviously part of our How to Make Breakout Trading Work series. This is, well, I think the second one, isn't it, Thomas? Because we got one group left, I think, bonds.
Yes.
So we've done all the others, indexes, energies, grains, softs, metals. Are there any others? It's too early in the morning for me. My brain isn't quite going yet, but I think we got those. And currencies. Did we do? Yeah, we did currencies last week. So,
currencies, and I think you missed one more, which I don't remember.
I think I did.
But doesn't matter. So we're going to talk about European markets, and I think this is pretty neat actually, because there are some specific. First of all, I don't really understand why people ignore European futures, because there's. One thing is that you can get an access to a couple of very good European markets from TradeStation very easily. So, you don't even need to leave the TradeStation environment, and you already do have an access to very good European markets. And second, believe or not, but we have European markets, futures markets with long of data history, like 10, 15 years. So basically, there's no reason to ignore European markets. And of course, again, guys, for you, I'm talking about futures European markets, which are future markets which have been established in Europe and are supposed to be traded in Europe. But obviously, the world is interconnected nowadays, and also the German Eurex, and I think even part of the London exchange was bought by CME Group. So it's basically CME can give us an access to a lot of corners of the world, including European markets. So in general, trading European markets is as easy as trading, let's say, American indexes. It's very easy.
Yeah. Well, before we get started, how about we've got a couple more comments in the chat. So let's say hello to Bill. G'day, Bill. Bill said, I like Barcelona. I've been there 3 times.
Nice. Hey, Bill.
Barcelona is a great city. And bonjour from Pascal. Apologies for my French. I'm not very good at French, but welcome, Pascal.
Hey, bonjour.
Good to see you here.
Bonjour.
And
nice to see you.
Bill wants to know if we're going to be talking about Asian markets. It's an interesting idea.
Yeah, maybe.
Because we do actually trade Asian market, or I trade Asian markets using these techniques. So maybe we'll think about that. And then Sean said, European markets, do you mean Eurobond or UK gilts? I think we're going to get to that, aren't we?
Yes.
Right.
Yes.
So let's get started then, because I'm excited and Sean's excited. So.
Okay, so let's bring up the presentation and let's say, so first of all, there's a bunch of European markets. Like if you go to Eurex, if you find Eurex exchange on the internet, it's quite incredible. They are adding more and more tradable futures markets, and there's really a bunch of markets to trade. Now, you already know that we have kind of like a selection protocol here. So first of all, we only favor markets where we have enough of a quality data history, which means that we prioritize markets that's been here for a while and that's been proven and with all this data history. Second, quite frankly, I do not have experience with all the European markets yet. Maybe as an European, I should have gotten deeper into this topic. Yeah, shame on me. However, so when we talk about European markets, basically these five are evergreens: the Dow Jones, Euro Stoxx 50, FESX, DAX. Like DAX is a total. That's the number one index futures in Europe, except for London for the UK, but overall, like that's the number one. Of course, Eurobonds, FGBL, Euro BOBL, I don't know even what it means, FGBM, and Euro, I don't know how to pronounce this properly, SHATS, FCBS. Now we have, these all are great markets. You have data history, you have quality data, it's been here around, proven markets. However, we have in our hedge fund, we have direct experience with just three of these markets, and I'll tell you in a second which markets these are. And we developed a lot of strategies on these three markets. So I'm particularly going to talk about three specific European markets tonight. But what I also have to say that Europe is definitely not behind when it comes to the latest, greatest trend, which is micros. And actually, DAX already has got not even its mini version, but also micro version, which is a great news because I'm going to talk about DAX a lot tonight because there are some really, really neat things about DAX. Like it is so overlooked and so amazing market. So I'll explain all these specialties. And we also have new micro for the Euro Stoxx 50. So very good news is that these markets, these European markets, are highly accessible even for pretty small accounts, which I personally think is magical. I didn't expect, like Europe is usually behind with this stuff, behind the US. We're lagging a little bit, and I was surprised to see that we do already have micro and mini versions for these leading European indexes and futures markets. So it's amazing, like the opportunity is here. We can trade European markets like this, even with small accounts. I mean, who doesn't want that, right?
Yeah, exactly.
So let me share with which markets we do have we do have experiences in our hedge fund, and actually you'll be quite surprised how many strategies we have for European markets. So if we can move on, please, Andrew, thank you. So we particularly have experience with DAX, FESX, and FGBL. If I read it well, can you just confirm, Andrew, please? Because it's very tiny on my.
The one on
yes,
the left
FESX,
is FESX, and then FGBL. Yep,
yes,
that's right.
And FGBL.
Yep.
Yeah. Now, when I had a look into the database, so we have staggering 215 breakout strategies on European markets, which is quite a lot. Like I didn't expect so many European strategies, but then it struck me why, and it's a reason which I also shared, I think, in Empower Trader. And there are a couple of really great things about European markets that people are not getting, and that's a big pity, because these are the reasons why you should be really interested in this market. So first of all, for algorithmic trading, these markets are still quite inefficient. What it means, like when we talk about US indexes like mini S&P or Dow Jones or whatever, there is already, and there's been for a long time, going on an algorithmic battle, which means that these markets are highly efficient, which means it can get harder not only to get an edge, but also to maintain an edge for longer than, let's say, 1 or 1.5 years. Surprisingly, when it comes to European markets, there's still not this level of algorithmic battle, at least in markets like FGBL. And these markets can be really inefficient, which means it's super easy to find edge in these markets. And for example, the FGBL, you can see we have 102 strategies on FGBL, and we literally created them like this. Like, it's one of the markets where we had to put almost least effort to create a lot of good viable strategies. And the reason is because these markets are not efficient enough yet. Like it's really there. It's almost like there is kind of a edge just in approaching this market, because it has not been yet utilized fully, and that's why we have an opportunity to create something there pretty quickly. But we also have built on these other markets, FESX, the Euro Stoxx, and the DAX, which got this FDAX. It's called FDAX. The symbol is FDAX, but it's the regular DAX 30, the German index. And so that's the first thing, like the efficiency versus inefficiency. It really is a big deal. The other great thing is, and this is something that I think that a lot of people don't understand as well, is that it's like trading a European market is almost like trading 2-in-1, because European markets, they open usually about 8 a.m. European time. Now, just to give you some perspective, in Europe, the US markets usually open around 3:30 p.m. And that means that about 8 a.m., for example, DAX opens about a.m. and then it trades until 3:30 p.m. It trades its own, let's say, European session, where a big part of financial European system is engaged in these European markets, and they trade, and there's a volatility, there's volume, there's tradability, there's movement. And then 3:30, it pretty much starts matching the US session, and it's literally like there's a second completely independent session. And in a sense, trading European markets, it's almost like if you would connect two different markets into one, and you're getting double the exposure, double the possibilities to trade these markets. And it means, and I'll show you, it means some extra benefit. For example, you can have a very high sample size on markets like FDAX, because you can literally trade double session. So you trade double, even if it's just one market. Then, of course, you have quite interesting correlations, because you're trading completely outside of the US hours, like completely. And then, of course, because you can have a double trading session and you trade double, you can make more money on one market. And I'll show you how DAX is probably the most potentially profitable market I've ever seen. And I'll explain you why. So it's like 2-in-1. Trading European markets, it's almost like 2-in-1. And I think these are great benefits.
Yeah, that sounds amazing. I can't wait to see how you split up those sessions, because, as you mentioned, it can sometimes be like you're trading two different markets. So I'm going to ask you about that, but I know it's coming, so I don't want to jump ahead too far.
It is coming.
Yeah. Okay, so no comments in the chat about this so far. If any questions, let us know. I just posted a question. If anyone here is currently trading any EU markets, if you are, be interested to know which ones. If not, that's okay. Thomas is going to give you loads of tips today.
Yeah.
All right, Thomas, I think we can move on.
Okay, so let's get back to presentation, please. So now you understand that there are a lot of benefits in these European markets. And now here is the, so you already know that you're dealing with something which is out of the mainstream interest. Hallelujah, whatever is outside of mainstream interest, that's always the best thing to trade. Second, you already know that you have inefficiency. That means that you can really create powerful, strong edge. And third, you already know that you're pretty much getting two different sessions in one. That means that it's almost like double trading in one market. Now let's get closer to these time sessions and time templates. And so let's start with these sessions, because this is like any market, even European markets, they almost trade 24/5 nowadays. So they do have this continuous overnight session. However, as I already said, the real thing how it works is that it follows the European session, which and usually banks open about 8:30, 9 a.m. It depends which country. It's different in Czech Republic, different in Spain, different in France, different in Germany. And then they trade their own session until 3:30. And then 3:30, you can start seeing there is some almost correlation going on with the U.S. markets. In a sense, sometimes you could almost do an arbitrage between these two, but that's a different story. So the point is that you have two possibilities how to create trading strategies. The first possibility is just follow this U.S. market session. That would mean 3:30 to 10 p.m. German time, which is pretty much 9:30 to 4 p.m. Chicago time. And if you take any of these European markets and you only limit to this session, you already you can already create a totally tradable strategy. And we created a lot of strategies just for these US sessions, because in these US sessions, still it looks like there can be more volatility and more of a movement compared to the morning session, because some markets can get a little bit lazier in the morning, in the European morning, but it's not a rule of thumb. It really depends. Now, if you want to get both sessions, you pretty much expand the session and you start around 8 a.m. German European time. Now, this number, 8 a.m., is really, really, I would say, very benevolent, because we experimented with 7, 7:20, 8, 8:30, 9 a.m., and it pretty much doesn't matter. Overall, bankers, they start working about 8:30. Like I suspect the first trades are being made around 8:30 a.m. or 9 a.m. European times. So you have a potential to try different time templates here, and it doesn't matter whether you start 8 or 8:30 or 9. It's just you can have a look at volume and you can play with this a little bit, and it's up to you. But the point is that pretty much whether you trade the US part only or the European plus US part, it's completely same development process. Like, we do not do anything differently or especially different. The only thing is that we can allow up to 3 trades per day if we have the whole session, and we can use some profit targets. So we can get during that day, we can get into, let's say, FDAX market 2, even 3 times. So it really depends. But overall, it's up to you. If you expand this whole session, then, as I said, you can have a lot of trades and you definitely get some benefits. And I'll show you a comparison of a strategy with US only and European plus US session as well. So do we have any questions regarding these time templates?
No, we don't have a question, but we've got a comment from Sean. When I asked if anyone trades EU markets, Sean said he trades the Eurobond mainly on a daily time frame. I must say it is very trendy.
Yeah, I think this is another good thing. Like, these markets are really trendy, really trendy.
Yeah, and that's all we've got. So no questions on time sessions.
Mm-hmm. Okay, so let's move to the time frames. So I went through our database, and I know this is a little bit funny, but you know, with a lot of markets I presented 2 or even 3 different time frames, which we had to come to be able to develop a profitable trading strategies. Meaning, with a lot of other futures markets, you pretty much try time frame 1, doesn't stick, go to the next one, go to the next one, go to the next one, and if you're lucky, after a couple of weeks or months, you have 2, 3 highly preferable time frames, which and then you just stick with these 2, 3, and that's what you use for your strategy development. And we discussed this in previous parts a couple of times already. Now, with these European markets are so, I would say, efficient that in our database, I could not find any other time frame. Literally, for each of these 3 markets, we only have 1 time frame, and that's because the first time frame we tried, we were already so successful with that we became a little bit lazy and we didn't have to try any other anymore, which is quite ridiculous, right? Like, it's the right opposite of all other markets. But we literally tried FDAX 60 minutes, FESX 80, FGBL 90, and we immediately, right away, were successful with these trees. Big way. We after short time, we loaded our database with what you saw, like 200 plus strategies, and we said, that's it. That's all we need right now. Let's move to other markets. There's not even point for us trying different time frames, because we got what we have. Like, we have great strategies, like all the whistles and fireworks. It was there. So that's crazy. That again says how unexplored these European markets are, how underrated, underappreciated these markets are, because it's something that if I would say something like this with any other futures markets in the US, it would sound like a joke or laziness or poor trading approach or unprofessional approach or I don't know what. With European markets, it is like this. Magic, isn't it?
So, Thomas, if you were to have a guess at a lower time frame on, say, for example, the DAX on a 15-minute, I know you just said that you haven't tested it, but given the characteristics of that market, what do you think? What kind of results do you think you'd get by a lower time frame?
That's an interesting idea. I have to say that out of these 3 markets, DAX is probably the hardest one because it's becoming more efficient, and I'll explain why, because it's a crazy market. But I suspect that you could be successful even with 15, 20, 10 minutes. Like, I can see it, especially if in the other FESX, FGBL, I can see why not. Maybe the only question is what your average trade will be. Like, with any market, you might fight a little bit with the average trade. But yeah, I would believe it should be possible in these markets.
Yeah. We've got a comment here from Bill in the chat. I heard that since Brexit, the London markets have lost its importance to Frankfurt. Please expand how that may affect our retail trading.
Quite frankly, Bill, I don't know, because after the Brexit, all trading in London, everything it's in a mess, and there are, it's really, you have no idea what became legally with trading after the split. Like, my friend trading with IB, he had his IB account in Interactive Brokers. I mean, he had it in London. They kicked him off, closed his positions, liquidated all his positions, didn't allow him to trade a lot of markets.
Wow.
Right now, I don't know. I don't care about London markets at all until the legislation is clear. And I personally think that nobody knows. I think that it's all still in transition phase, and it's still in a lot of gray area. And I think it will need a couple of years to clarify. So for me, as a non-UK resident, I definitely have leisure challenges to trade in the UK. I don't know. Right now, I don't know what's going on with London. We need to wait a little bit more. I mean, there's still not a clear way to send Amazon packages from Amazon from UK to Europe anymore. Like even these simple stuff are super complicated right now. So let's see. I think 1 or 2 more years, and then we will see.
Yeah. Bill said that explains the confusion. Thanks.
Yeah, a lot of confusion.
Good comment, Bill. I never actually considered that. So, all right, that's it, Thomas. If you want to move on.
Yeah. Let me I just can see that my camera color got really weird. But I'm not sure if I can do with it. It's big because of maybe a little bit better now.
Okay. We got
okay.
Actually, before we move on, we got a question from Olga. G'day, Olga. Do micro DAX and stocks have enough volume for trading?
Quite honestly, Olga, I didn't have time to check because when I was preparing this episode, I didn't know they had micro. You know how it goes in Europe. Like we're always behind with this stuff. So when I was just out of interest, I went through to the German Borsa, the German exchange webpage, and I realized, wow, they have micro. This is amazing. Like, how's that even possible? Are we talking about the same Europe? But I don't know what the volume is. But I especially for DAX, I suspect it will be good because it's super popular market. And if it's not good now, it will be very soon. So you might need to go to Eurex webpage and have a look.
Yeah. We trade the micro DAX through Striker and for ACube trading, and we haven't noticed any crazy slippage. So I don't recall the volume off the top of my head, but it seems to be okay for DAX. We trade stocks, so I don't know about that one.
Yeah.
Yeah.
Absolutely.
I imagine because of the contract size and the margin requirements for DAX might be a little large for some people. So I think there's been quite a good adoption of micro DAX. But Nick is saying micro DAX, yes. Yep.
Yeah.
Thanks, Nick.
Okay, cool. All right. So let's now talk about and this is the interest. I think this is the most interesting part because I want to talk about these examples, and I'm going to talk about these sessions, and I'm going to explain something very specific about DAX. So let's start with this example. So I already said that pretty much if you expand the session Europe plus US, you're getting like double exposure, double session in one market. So first of all, I created an example here with DAX where there are both sessions, and I want to show you. So in this example, this is the first example. It's a swing strategy, and it's the regular session only. And if you have the US session, which means the Chicago 9:30 to 3:30 p.m. or something like this, the regular Chicago session, which is 3:30 European time, German time until 10 p.m. Germany. Now, this if you focus on this session, it pretty much works like any other index on futures. You have great strategies, good strategies. It's very similar. However, if you have a look on this particular example, and this is a very ordinary DAX strategy on this Chicago time, if you will pay attention, there is something that probably will call your attention already that stands out. So what, Andrew, let me know. Do you know what it is?
Something that stands out.
Yeah, if you would compare this to although it's the same session like Chicago, if you would compare it with other US indexes, what is it that stands out with this European index?
Well, let me see. There's a couple of things that jump out to me immediately. The average trade is quite high, which then of course is impacts the net profit. Also, the percent profitable is quite high for breakout trading. I guess it depends what kind of exits you've had, but I'm guessing you'll probably want to point to average trade. Am I guessing correctly?
Almost.
Almost. Okay.
Average. Yeah, because there are two things. Those first one, you're right. Like 205 on indexes in general, it's really high. Like you don't get this even with Nasdaq probably. So it's really high. But then if you pay attention a little bit, then there's one other particularly interesting thing, and that is that this is a 10 years history, as always. One futures contract, so the net profit is always per 10 years. One contract, so if you trade 10 contracts, it would be 1.6 million. Now, we always develop and test strategies on 10 years history, as you already know from our Breakout Strategies Masterclass. Now, if you guys ever tried US markets, then your net profit per 10 years history will be usually around 100, 120, 140K.
Yep.
Here we can see 163, which already is exceptionally high. I'm not even sure if we have in our database a strategy which would have over 160K on an index on 10 years history. So it's not only the average trade, which is exceptionally high, it's also the net profit, which is definitely higher. It's on the very high side compared to basically any future markets. And now here is the crazy part. So if you think about the most profitable markets, futures markets that you ever experienced, Andrew, which markets would that be? Like markets that on the 10 years history give you really, really high net profit. Which markets would you think about?
So you're just talking about just US markets?
Yes, US markets.
Because the Hang Seng moves pretty nicely as well. But if you're just staying to US, probably metals are pretty good.
Metals,
gold can be pretty high net profit. Sometimes energies, maybe crude. If you're doing swing,
crude, absolutely.
Yeah.
So now when exactly? So now, if you just recall from your memory, if you build a strategy on gold or on crude oil, and you have a really good strategy, what is the peak net profit for that 10 years period?
Well, maybe probably 100 to 120, maybe 140.
Exactly.
Wouldn't be not usually over 160.
Exactly. Not usually over 160. Now, get this. DAX is the only market in the universe where I literally saw net profit for 10 years up to $300,000.
Whoa.
Which is unheard of. So this market is crazy. Like FDAX is totally craziest market out of all future market. It is crazier than gold. It is crazier than crude oil. It is crazier than natural gas. And it's the only market where you can get absolutely top peak performance in the amount of absolute dollars on average per year, which can be double compared to any other market. But you will pay with way bigger drawdowns as well. I saw strategies on DAX that could make 25, 30K per year. That means about 250, 300,000 for 10 years period. But drawdown could be 30, 40K. So very high drawdowns as well. So this is a very serious market for big guys, like for hedge funds. This is a crazy market. Like this market for a hedge fund can really leverage the capital. It's very tradable, a lot of contracts, and it's super wild. That's why I think it can be really interesting to focus on the micro version, because you still can get a lot of benefits from these crazy markets. Now, of course, when I'm talking about is high profit, then I'm also talking about the whole session. So as I said, now you have double session, and because you have double session, that's why you can really push the peak performance up to 300,000. So this is the second chart I have here, the second slide. And here you can see 215K per 10-year history, Andrew.
Nice. Very
isn't
nice.
it?
Yeah.
And have a look on the sample size. It's crazy. Almost
Wow.
2,200 trades. So that's what I mean when I say you're literally getting double. If you expand the whole session, you double the whole experience. You double the number of trades. This is insane sample size, like insane. It literally, you trade every day and you double the net profit, like 215. And we have higher. We had 250, 260, up to almost 300,000, which I saw in our database. So that's all doable only and only with DAX. And this is very heavily traded strategy. I think there's some small profit target or something like that. And even with this, the average trade is $100 per trade, which is still really high for a strategy which trades very frequently and goes for smaller exits, faster exits, faster profits. So again, DAX is the only market that offers possibilities that you cannot get on any other market, future markets in the US. Potentially you can get it in Asia, as Andrew said on the Hang Seng, that I have no experience with. But in the US, there's no market where you could push so far like that. So I think it's really interesting market, like super interesting market.
Awesome. We got a couple of comments in here, Thomas. I know you've got a couple more examples, which we'll get to in a sec. Mark would like to know, is there a VIX equivalent in TradeStation for DAX or other Euro markets?
I don't know. Like if you want to trade DAX, just the regular US session, the Chicago session, you use the normal VIX, like the typical one. If there's already European version of VIX for the whole European session, I doubt that. I've never heard about it. I would have to investigate, but I'm not aware.
I imagine there probably would be, but I don't know for sure. I've never looked. Yeah. And then a question from the Undead. Love the name. Welcome, Undead. Not sure if it was asked before, but where can you get EU stock market data on individual stocks?
On individual stocks, I'm not sure about that. It depends on your broker. Like any good broker should give you an access. A lot of brokers. I don't trade individual stocks. I only trade future markets. So I never had a need to investigate. But every decent broker can get you. Like, I mean, even my bank in Spain can get me access to all the Spanish stocks. And I mean that. Any good broker, especially if you're in Europe, should give you access to this.
I don't think it's available in TradeStation, is it?
I'm not sure.
In the US version, because I think there's an international version of TradeStation as well, isn't there? That plugs into IB, maybe.
Know. Yeah, IB exactly. IB definitely. You can with IB interactive. You can definitely trade single European stocks almost from any country.
Yeah. All right. Undead said thanks.
Yeah.
So we can move on to the next example.
Yeah. So now here's one contract. So this is quite interesting about this wildest market ever by big margin. On the contrary, the FEX and FGBL are one of the laziest, most boring markets ever. So it's pretty funny. But you know, now Andrew, if you look at this FESX, the stats, what is it that brings up your attention?
Well, net profit was the first one because it's the top of the list, 25K for 10 years.
Yeah. But now, like, let's have a look on the drawdown. Like, have you ever experienced drawdown below 4,000?
No,
on the US market,
low, isn't it?
It's really, really low, really low. So that's the benefit of these other two markets, the FESX and the FGBL. These markets, like, first of all, FGBL's got insane liquidity, but insane. It goes to millions and millions. It's so tradable. You can trade probably tens of thousands of contracts there. And second, these markets are pretty slow, but really good for small accounts, because no, you will not become a billionaire. No, you will not make killing like in DAX, But these markets can be traded with small stop losses, small drawdowns, will not give you too much of a hit, will not give you too much of a pressure, and still are very good markets. So this is a typical strategy that we have for FESX, nothing extraordinary, just a regular normal strategy. And then we have on the next slide, if we can move on, we have FGBL, 90 minutes, again, 4,000-5,000 drawdown, which is, and there it can be even lower, it can be about 3,000. So again, pretty good for smaller accounts. You can have a lot of fun with these markets, a lot of learning, not too much of a pressure. These markets work pretty well, and even this looks like a super small profit. In our hedge fund, we can literally take thousands of contracts if we want to, because the liquidity on FGBL, it's really insane. So again, very specific, very particular markets, all three of them, but very tradable, very doable, very easy to find an edge or breakout trading strategy. And you can have both. You can have super exciting, super fancy, super hyped DAX, or you can have these slow, steady, or almost lazy, but pretty predictable, pretty inefficient markets like FGBL and FESX. So I think really a lot of good potential here.
Yeah, we've got a couple of questions in the chat. Let's put this one up on the screen from Mahad. What's the difference between average trade net profit and average winning trade?
The average winning, the average net profit is the whole. It's the net profit divided by all the trades, whereas average winning versus average losing trade is just all the winning trades. It's a sum of profit of all winning trades divided by the number of winning trades only. So it's basically, it's exactly what it says, like what is the average winning trade, what is the average losing trade, and what is the average trade for both of them combined.
Yep. Okay, thank you. Here's a question from Eric, which is kind of a couple of questions all wrapped into one. So first of all, how many ticks do you generally use to stress test these markets? And I guess the second part of that question is, how do you stress test these markets? Do you compare European indexes to US indexes, or what do you do there? So maybe let's start for that, and then we'll come to the second part.
Yeah, this is a tricky one. So first of all, that's why we started the FDAX. The reason why we started with the US session only is because, of course, we could stress test it on US markets. So that's something you can do. Now, when it comes to FESX or especially FGBL, the truth is that these markets are still so inefficient. That means the edge is still so powerful there that you don't really need to stress them. As I said, the reason is because you're working with from the algorithmic point of view, you're working with very underrated, underdeveloped market. It's so, like, it works so well there that you don't need to stress test them. The FESX and FGBL, you just don't need to. It's so exceptional. It's so different. So as you can see, we cheat this one a little bit for a reason.
Yeah, Holger actually come up with an interesting idea. Let me put this one up on the screen about stress testing. How about DAX versus stocks?
Yeah, sure. I mean, any idea like this is definitely worth testing. And don't get me wrong, we do have some cross-validation on different markets in our database. It is just that we don't pay attention to them. Like right now we don't. So yeah, this is a good idea actually. Olga, definitely something doable as well. I like that.
Yeah. Now there was a second part to Eric's question. Let me go back to this. Have you developed successful day trading strategies on them?
We don't have any in our database. So I don't know if we didn't even try or if we couldn't. I assume like for FESX and FGBL, you probably will not develop it because you will suffer with low average trade. So I'm not sure if it's a viable option. For FDAX, I think it's very viable to create a day trading strategy. It should be possible. It should be possible. I used to, when I used to trade discretionary, I used to trade DAX as well as a day trader, and it was totally day tradable. So I assume that should be possible.
Yep. All right, we've got a question here from ASF. How much are your average cost per trade for one contract on DAX, for example? Contract is about 350k euro, if I'm correct.
I don't know how big the contract is. Like the transactional cost is just the commission per one contract is about $4 or $5 US, something like that. Very low. It's not. We don't even pay attention how low it is. So it's normally DAX. It's the commission. It's about $5 round turn. So it's very low.
Do you notice much slippage in the DAX?
Yes, in DAX you definitely will have a slippage about one tick on entry, because it can be sometimes very volatile, sometimes even bigger. Like we did experience even 6, 7, 8. Like on DAX, you definitely will experience slippage, definitely. But also DAX it's got very, very high average trade, so that's it's all right. Like it can absorb these higher slippages. The thing about FGBL, it's one of the markets that you can literally trade with limit how liquid it is. So you will have very low, almost non-slippage on this market. It's so liquid. And we tested it with limit orders and all of them filled successfully. It's crazy. It's crazy liquid.
Yeah. Okay. Question or maybe a comment here from Sean. I like boring markets as long as they're trendy. Did currencies in the past, and they're wild, and the news can screw things up easily. So do you take into account the news in the European markets, especially like things that move pretty quick, like the DAX?
We don't. But yeah, you made a point that sometimes these, if something comes to, especially for DAX, if some major information comes in, then it can really become very quickly very volatile. And then, as I said, you can have a occasional, but very occasional, very big slippage. I think we experienced it, even something like 10 ticks, like something wild.
Wow.
I was like, wow, I never seen it like this. But also on the positive side, not only on the negative side. So yes, it's DAX is definitely a market for the biggest boys. It's the most craziest, wildest, and potentially profitable market out there so far, from my knowing. So if you want to trade DAX, you need to be careful and you need to get ready for everything. That it is the way it is. It's a market for big boys, literally. Unless you trade the micro version, that's a different story.
Yeah. Okay. Then we've got a comment in the chat. This is Neil helping out Mahad. Net profit equals wins minus losses. Average trade is net profit divided by the number of trades. Average win is the win dollar divided by the number of winning trades. So thanks for helping out there, Neil. Appreciate that.
Thank you, Neil.
So I'm just scanning the chat. It looks like we've covered all the questions for now. So if you've got any more questions, please post them in the chat. And in the meantime, Thomas, how about we go to the quote of the show?
What do you think? That's a funny one. That's a funny one. I was searching for quotes and I found this fantastic quote. Europe is always a good idea. And I think it's so on spot when we talk about European markets. I believe that when it comes to markets, Europe is always a good choice, always a good idea. You'll never get wrong with including European markets. Wherever you are in the world, you'll never make a mistake including European markets into your portfolio. And I'm not saying it as a European patriot. I'm saying it as an objective trader.
It feels like that's from a movie, but I can't quite place it. So, do you remember where that quote came from? Is it from a movie? Europe is always a good idea.
I don't know. I just saw it on the internet. I was like, yeah, that's the quote.
Yeah. All right, Thomas. Nice quote there. So, let's before we have some final wrapping up of questions, I'm just checking the chat. Nothing yet. Mark is having a good laugh. Maybe he recognizes the quote. So, yeah, thanks for joining us today. Please remember to give us a thumbs up in the video, ding, if you enjoyed it, because it helps us to spread the word a little bit more. It lets the YouTube algorithm know that the quality of the information Thomas is sharing is pretty high, and I'm quite inspired to test some more European markets over the coming weeks. So what do you think, guys? Who's going to be testing European markets in the coming weeks? Let us know in the chat. We've got a comment here from Bill. This is an interesting one, Bill, about the war in the Ukraine. How do you think this is going to be affecting trading, especially, I guess, in the European markets, because it's in Europe? Do you think there's going to be any long-term effects for the markets?
Who knows? We will see. Of course, it is impacting volatility. It always does impact volatility. Yeah. So, of course, we are in a turbulent regime a little bit right now, and we can see big volatility and ups and downs. But, you know, it's just part of trading. I had a presentation in the masterclass we did with Andrew, I think 3 months ago, when we were talking about crisis, and I went back to history with many other crises, and like everything is repeating itself. We had it in the past already. So just part of the game. We do have crises and challenges and volatility and high volatility, low volatility. But of course, it is impacting for sure. It is.
Yeah, actually, we had so as part of our elite program in BTA, which is like a 1-year mastermind program for our most advanced traders, we actually had a special guest, Linda Rashke, a couple of weeks ago, and one of the questions to Linda was about, what's going to happen in the markets, and a broker's going to go bust, and all these questions about fear, and Linda's comments were basically that you can't let that be your focus. Things are happening all the time in the markets, and you've just got to look at it from the point of opportunity. And these types of things, there is a lot of volatility in some of the markets. It can be risky, but there's also a lot of opportunity there. So her comments were basically, just deal with it. Don't let it ruin what you're trying to do, and whatever happens, but just focus on the opportunity rather than the negative side effects of things like that. So
exactly. If you remember that presentation, Andrew, for the Breakout Strategies Masterclass we did, I think it was January or February. We presented so many, things that have never happened before. And like we had every year, there was something new, and how this will affect, and traders were like scared and panicking, and what will happen and how this will impact, and this is different and this is different time. And when you present 10, 20 happenings like this in a row, then you're almost like, who cares? Like literally, who cares? Like we have these special once a life circumstances in the history. We have them every year. So yeah, I think it's brilliant what Linda said, because exactly, it is what it is. It's part of the game and the world we live in.
Yep, there have been plenty of wars in the past, and there will be more in the future, unfortunately. So we just got to learn to deal with it, I guess, from a market's perspective anyway. Okay, we've got a couple more comments here, Thomas, and then we'll wrap this one up. So here's an interesting one from Sean, which I don't think we've considered, but maybe we should. Will we have one session on Asian markets like the Hang Seng, Nikkei, or Nifty?
That decision, it's not up to me.
I trade those markets. I don't trade the Nifty, but I trade the Hang Seng and Singapore Index, the Nikkei, and the SPY, which is the Australian 200 Index. So maybe we should think about doing a session on that if people are interested, because this This breakout masterclass framework that Thomas teaches in BTA works everywhere. So we've seen it work in Europe, works in the US, works in Australia, works in Asian markets. So that's what we love about it. One model, any market, and it works.
Any time
Excuse
frame.
me.
Yeah.
Exactly. Yeah. Let's have a quick sip of water. And then Bill says, I like Linda Rashke and what she said. Yeah. Very wise. She's had a lot of years in the markets and had to experience a lot of things. So, all right, Thomas. Well, it looks like that's it for today. So, do you have any closing comments before we finish this one up?
I thought the quote was the closing comment.
Oh.
Guys, you'll never go wrong with Europe. That is my patriotic closing comment.
All right, sounds good. So thank you very much for joining us today, everyone. Got a lot of good questions in the chat and a lot of good comments as well. So thanks for joining us. And Thomas, any clues? Actually, I gave it away at the start, didn't I? We got one more, apart from maybe Asian markets, but we got one more group that we're going to talk about. And what is that?
Actually, you know what? We maybe have two. Because one so the hardest one, this one is the one I wanted to leave as the very, very last one, and it's the hardest one, and it's bonds. Like bonds are super, super hard. So I wanted to leave bonds for the last one. But then I realized that we didn't go through meat, but I don't even know if our situation with meat is. So I have to check what the situation with meat is. Maybe I will put them together because these are so specific and it's just two markets in meats and two markets in bonds. So yeah, I have to think about it, but definitely at least we will cover bonds, which are really difficult.
Yeah. All right, just putting up some thanks for what you've shared today. And I saw Thomas say, I'm sorry, not Thomas, you're Thomas. I saw Olga say, thank you, very interesting show. I'm interested to know if Olga is going to branch out into the European markets one day. I know she's still working on US. Yeah. Ludwig, thanks for the great show. Welcome, everyone. So I think that's it, Thomas. If you got no more closing words, then have a good week, everyone. And we'll see you at the next one in 2 weeks' time.
Absolutely. Thank you very much, Andrew. Thank you, guys. See you.
Cheers. Bye-bye.